In exactly 100 days, the investing world will change forever. Warren Buffett, the Oracle of Omaha who turned $10,000 into over $400 billion, is stepping down as CEO of Berkshire Hathaway after 60 legendary years. This isn't just another corporate succession story. This is the end of the greatest wealth-building era in modern history. You can now invest exactly like Warren Buffett, get the income that Berkshire never paid, and potentially build generational wealth, all through a handful of ETFs that didn't exist until recently. By the end of this video, you'll discover the exact portfolio that mirrors Buffett's holdings, generates a target 15% annual income, and could turn your family's financial future around forever. But first, let me show you why this moment in history is so critical, and why the next few months represent the opportunity of a lifetime. December 31st, 2025 marks the end of an era. Warren Buffett will hand over the CEO reins to Greg Abel, ending the longest and most successful run in corporate history. But here's the plot twist that creates a massive opportunity for regular investors like us. Berkshire Hathaway is sitting on $348 billion in cash, more than the gross domestic product of most countries. Think about that for a moment. That's enough money to buy Apple, Microsoft, and Google combined and still have change left over. Under Buffett's leadership, Berkshire Hathaway never paid dividends to shareholders. Zero. Nothing. This meant that despite owning pieces of the most profitable companies in America, Apple, Coca-Cola, Bank of America, American Express, Berkshire shareholders got absolutely no income from their investment. Buffett's philosophy was simple. We can reinvest your money better than you can. And for 60 years, he was absolutely right. But that created a massive problem for income-seeking investors who wanted to benefit from Buffett's stock-picking genius while actually getting paid for their investment. But Greg Abel has hinted at something revolutionary, the possibility of dividend payments under his leadership. Industry insiders describe Abel as having a more hands-on operational style compared to Buffett's traditional hands-off approach. This succession isn't just changing leadership, it's potentially changing the entire investment philosophy of the world's most successful company. And that creates a once-in-a-generation investment opportunity that smart money is already capitalizing on. And that's where these new Buffett-style ETFs come in. They're solving the biggest problem with Berkshire Hathaway: no income. They give you Warren Buffett's exact investment approach, his stock selection genius, his long-term thinking, and they pay you handsomely while you wait for the magic of compound interest to work. Let me show you exactly how this works. Meet OMA, the VistaShares Target 15 Berkshire Select Income ETF. This fund launched just 6 months ago in March 2025 and has already attracted over $545 million from investors who discovered something incredible. You can own Warren Buffett's exact stock picks and get paid 15% annually to do it. Think about that. 15% annual income while owning the same stocks that made Buffett the most successful investor in history. Here's how OMAH works its magic. The fund holds the exact same stocks as Berkshire Hathaway, Apple, American Express, Bank of America, Coca-Cola, Chevron, but uses sophisticated option strategies to generate that 15% target distribution rate. You're getting Buffett's stock selection genius combined with professional income generation that Berkshire itself never provided. It's like having your cake and eating it too. The fund pays monthly distributions, so you're getting consistent cash flow while participating in the long-term growth of Buffett's favorite companies. But let me be crystal clear about something important. That 15% target isn't just traditional dividends. It's total distributions that come from multiple sources. Dividend income from the underlying stocks, which is about 7.48%, plus additional income generated through covered call option strategies and realized capital gains. This innovative approach addresses the key limitation of Berkshire's traditional approach while maintaining exposure to Buffett's incredible stock selection. But OMAH is just the beginning. There are 4 other ETFs that complete what I call the ultimate Buffett-style portfolio, and when combined strategically, they create the generational wealth formula. Let me break down each piece of this wealth-building machine. First, we have MOAT, the VanEck Morningstar Wide Moat ETF. This fund embodies Buffett's obsession with competitive advantages. With $12.66 billion in assets under management, Moat only invests in companies with what Morningstar calls wide economic moats. Businesses so dominant in their industries that they can maintain pricing power and crush competition for decades. Think of companies like Microsoft with their software ecosystem, or Visa with their payment network. These are businesses that Warren Buffett would describe as having unbreachable competitive advantages. Moat has delivered 6.67% returns year-to-date and charges just 0.47% in annual fees. It's Buffett's competitive advantage philosophy systematically implemented by professional fund managers. Next is VOO, the Vanguard S&P 500 ETF. This is the ETF that Warren Buffett personally recommends more than any other investment. In fact, Buffett has said that a low-cost S&P 500 index fund is the best investment for 90% of people. VOO costs only 0.03% annually. That's $3 for every $10,000 invested, and has delivered 13.4% compound annual returns since Buffett endorsed this strategy in 2014. With $622 billion in assets, VOO gives you broad market exposure to the 500 largest American companies, exactly as Buffett suggests for the foundation of any portfolio. The fourth piece is QUAL, the iShares MSCI USA Quality Factor ETF. This fund systematically screens for the exact metrics that Warren Buffett looks for in quality companies: high return on equity, low debt levels, and stable, predictable earnings. With $52.87 billion in assets and a 9.05% year-to-date return, QUAL uses quantitative analysis to find companies that pass Buffett's quality tests. It's like having a team of analysts constantly screening thousands of stocks to find only the highest quality businesses, exactly as Buffett would do manually. Finally, we have VTI, the Vanguard Total Stock Market ETF. This fund captures Warren Buffett's fundamental belief in the long-term success of American business by owning literally every publicly traded American company, from large-cap giants to small-cap innovators. Since its inception in 2001, VTI has delivered 774.97% total returns with 9.33% annualized gains. It costs only 0.03% annually and has $542 billion in assets. VTI represents Buffett's confidence in American capitalism condensed into a single diversified investment. Now here's how you combine these 5 ETFs into a generational wealth-building machine. I call it the Buffett Core Satellite Strategy, and it's designed to provide both growth and income while minimizing risk through diversification. For your core holdings, representing 70% of your total portfolio, use VOO and VTI. This gives you comprehensive exposure to American equity markets at rock-bottom costs, exactly as Warren Buffett recommends. VOO provides exposure to the largest, most established companies, while VTI adds mid-cap and small-cap companies for additional growth potential. This core foundation costs almost nothing in fees and provides the broad market returns that have made America the world's wealth creation engine. For your satellite holdings, the remaining 30% of your portfolio, strategically split between OMAH for income generation, MOAT for economic moats, and QUAL for quality screening. OMA provides that 15% target income stream while maintaining Buffett-style stock exposure. MOAT adds companies with unbreachable competitive advantages. QUAL ensures you're always invested in the highest quality businesses with strong fundamentals. But here's the secret sauce that transforms this from a good strategy into a generational wealth-building machine: dollar cost averaging. This means investing the same fixed amount every single month, regardless of what the market is doing. Whether stocks are up, down, or sideways, you keep investing consistently. This strategy removes emotion from investing and has turned ordinary people into millionaires over decades of consistent implementation. Let me show you the mathematics that will absolutely blow your mind. Based on the historical returns of these ETFs, if you invest $1,000 monthly into this portfolio, You could potentially accumulate $264,000 over 10 years. But here's where it gets really exciting. Extend that timeline to 30 years, and the magic of compound interest creates truly generational wealth that could exceed $1.5 million. And remember, during those 30 years, you're receiving consistent income from OMA's distributions, so you're getting paid while your wealth compounds. The key to this entire strategy is consistency and time. Warren Buffett himself has said that his favorite holding period is forever. These ETFs allow you to implement that exact philosophy while generating substantial income along the way. You're not trying to time the market or pick individual stocks. You're systematically participating in the long-term growth of American business while collecting dividends and distributions that compound your returns. But why is right now the perfect time to implement this strategy? 3 massive converging trends are creating a once-in-a-generation opportunity. First, Warren Buffett's impending retirement is creating unprecedented uncertainty around Berkshire Hathaway's future direction. While Greg Abel is highly qualified, he's not Warren Buffett. This transition makes these ETF alternatives more attractive than ever before. You get Buffett's investment philosophy and stock selection without the uncertainty of new leadership at Berkshire. Second, artificial intelligence and advanced analytics are revolutionizing value investing in ways that directly benefit funds like Moat and Qual. These technologies help identify undervalued quality companies more systematically and efficiently than ever before. What once required armies of analysts can now be done with sophisticated algorithms that screen thousands of companies for Buffett-style characteristics. This technological revolution is making smart beta and factor-based investing more effective and accessible. Third, there's been a massive shift toward active ETFs that's creating tremendous opportunities. In 2024 alone, active ETFs attracted $330 billion in global inflows. That's 22.24% of all ETF flows globally. Smart money is moving toward professionally managed, low-cost strategies exactly like the ones we've discussed today. The institutional investors and family offices are already implementing these strategies, and individual investors are just beginning to catch on. The demographic trends are equally powerful and point toward massive growth in systematic investing approaches. Millennials and Generation Z are embracing ETF-based strategies at unprecedented rates, and they're inheriting the largest wealth transfer in human history from their parents and grandparents. These Buffett-style ETFs are perfectly positioned to capture this massive demographic shift towards systematic, low-cost, professionally managed investing. Here's your specific action plan to start building generational wealth today. Begin with small, consistent monthly investments in this 5 ETF portfolio. Start with VOO as your foundation. It's Warren Buffett's personal recommendation and provides broad market exposure at virtually no cost. Next, add VTI for comprehensive total market coverage that captures every segment of the American economy. Then systematically layer in OMAH for that crucial income component, MOAT for competitive advantages, and QUAL for quality screening. You don't need to start with huge amounts. Even investing $200 or $300 monthly, split across these 5 funds, will put you on the path toward generational wealth. The key is starting now and staying consistent. Set up automatic investments so you never have to think about timing or emotional decisions. Let the professionals manage the funds while you focus on the most important part: consistent, long-term investing. Remember, Warren Buffett didn't become the world's greatest investor by timing the market. He became wealthy through time in the market. These ETFs give you professional management, institutional quality research, rock-bottom costs, and systematic implementation of his proven principles. You're getting access to investment strategies that were previously available only to the ultra-wealthy, now packaged in low-cost, accessible ETF formats. The window of opportunity won't remain open forever. As more individual investors discover these strategies, competition increases and potential returns may decrease. But right now, today, you have access to the same investment approach that built one of history's greatest fortunes. You can implement Warren Buffett's exact philosophy while receiving income that Berkshire Hathaway never provided. The Oracle of Omaha's incredible legacy lives on through these systematically managed ETFs. His principles of value investing, long-term thinking, competitive advantages, and quality focus are now available to every investor willing to commit to consistent, disciplined investing. The question isn't whether these strategies work. Warren Buffett has proven that over 60 years of unparalleled success. The question is whether you'll seize this opportunity while it's still available. Start today with whatever amount you can invest consistently. Focus on the long term, ignore short-term market noise, and let the power of compound interest work its magic for decades to come. Your future self and your family's future generations will thank you for the decision you make right now. Generational wealth isn't built overnight, but it is built one consistent investment at a time. If this Buffett-inspired strategy gave you a fresh perspective on building wealth, make sure to hit that like button, drop your thoughts in the comments, and subscribe so you never miss the next step toward your financial freedom. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.